Eric Mother, mother.com, as we approach the end. And there's the market close. This is for June 27th, 2025. We can see we did close with a nice gain, a little bit off the highs as far as US markets are concerned. And take a look at where the BTC is trading. It is trading at about 106.8K. So markets here, the NASDAQ and the S&P 500 closing at fresh all-time daily closing highs, I believe. But for the week, for sure, yes, at new highs. Let's take a look at the summary for this week. And I wanted to include the monthly change, even though we have Monday, we have one more day for the month of June. But this gives us a little bit of an understanding. So you can see, take a look, for example, at let's take a look at the Dow. You can see that the Dow this week gained about 3.8%. And yet for the month, it's a little bit lower. In other words, the markets were tight over the last couple of weeks. So the markets were tight. We didn't know that we were going to break out or we were going to break down from that tight base. Of course, we've now broken out. And you can see all of this market showing that this move this week is pretty much counting for most of the weekly move or the monthly move. This week is counting for most of the move for this month. So a big week. Let's go to the charts. So I'm going to begin with the S&P 500. This is the hourly RSI setting of 26. And what I'm going to draw is there's a line. If I draw the top side line like this. Now you'll see this on the daily. For those of you who are following me, the daily's been doing the same thing. And so to appreciate what happened here is we finally cleared this line here, which is this gap up here. We tested the line. We held. That's why we went higher. We came back. We've held this area again. That's why we are closing with a nice push into the last trading hour of the day. Now this is true, and I'll show you that on the daily. But let's go to the weekly for the S&P 500. So we have a change in terms of what has been resistance. Now again, remember the weekly has definitely been sideways for a while. And let me highlight that area. Still, we were tight, very tight right there. And so, as I said, we didn't know whether we were going to pull back from that range or we're going to break out. Now, of course, I was leaning towards a breakout, and I did discuss that with you here in the last couple of weeks. And the reason is based on our understanding of the RSI on the monthly. Now, so we can see if you take the prior weekly closing highs for the SPX, somewhere in that range, you can see definitely recording a fresh all-time intraday and weekly daily closing high there. Now, is this a surprise? No. In fact, we started anticipating, believe it or not, we started anticipating the market being back at new highs here. And I'll explain that, why that was the case from the monthly charts. So you can see S&P 500 finally, after this sideways base right here, is now clearing what has been resistance. So this blue line on the RSI was resistance for a while, but now we are clearing it. So as long as we stay above that blue line, we favor a market that over time should be moving to the upside. Now that's one view. There's another view that could prove to be challenging, and we have to consider this as we go forward day by day and week by week. So there's this breakdown area here. Now that's where we break down. So the breakdown there corresponds with this movement coming off the highs. So we take that and we can draw a line, and that line is what could end up being resistance right there. And it's around RSI 61.8. So this is an area to watch for potential market failure. Now, another way of looking at this is going forward, since now we have a breakout, you take this range here at about 6,100 on the S&P 500. So about, let's call it approximately 6,100. As long as we are above this level, then you allow the market the room to continue recording fresh highs. Now, if we're in an environment where we see that the market has broken back below that range, then that's a failed breakout. It's going to confirm resistance here. Then that might set the stage for a pullback, especially as we go into a new month. Now, that's the S&P 500. And if you take a look in comparison to the NASDAQ, you can see they are almost similar to what is happening here. So the NASDAQ also showing that it is clearing the top side line of the RSI. And also notice how the NASDAQ was so tight here in the last couple of weeks. This was a very nice space. It was right there on a weekly closing basis the last 3 weeks, and this week it is moving higher. NASDAQ also recording fresh weekly closing highs there. So that's a fresh breakout, very desirable. Is it a surprise? Again, no, because we've been anticipating this move for a while. It's just taken its time, and now we come here. There's this trend line here. This is the red line shows us where we broke down this break coming off that area here. So you can see the red line could end up being resistance on a week-to-week basis. And for that to be confirmed as resistance, the thing we can do is we take the weekly closing high there and understand that should the market fail to hold above that level, in other words, if we roll over below that level, then that's a reason to be defensive or be out of the market, because failed breakouts are notorious for taking markets lower. I'll give you a good example. We can see that when the market was attempting a move to fresh highs in this phase in the early part of this year, so this phase here, we attempted breakouts a couple times here and here. Those failed breakouts ultimately led to this big drop. So definitely bulls want the market to continue moving higher, because a failed breakout can really set institutions into a sell mode. Now that's the weekly. Now take a look at the Dow. The Dow has been giving us a little bit of a different look, and the Dow has been struggling to clear this area here. This is the area where we see this movement of the RSI, of the price, and the RSI break. So RSI breaks here, and we have this price break, and we go down aggressively. And since then, it's become an area of resistance for the Dow. But you can see this week, we are doing our best to clear that level. So far, this is what the bulls wanted to see. Now, I need to go back to the S&P 500, because for those of you who have not been following me week by week, let's go back about 6 years. So just to set the stage, when the market was making these lows here, right there, beginning part of April, we were looking for a reversal, and we were looking for it was a risky bet, but the reversal was not based out of nothing. We knew that this is coming off the lows of 2020. This is where the RSI moved out of that range. So based on the uniformity concept, a concept I came up with many years ago, we had double bottom support here. That support was above RSI 30.9. So this was the lows right there. And then we come close to finding support on the same line, which is the lows there. Now these lows were clear to us even going back to 2022. Why? Because we had support on this black line. We had support on this black line. And also we had prices going lower as the RSI went high. So that positive divergence gave us an indication that we would bounce from here. Now we've come back here in the beginning in April, late March, early April. We tagged that level with uniform activity. In other words, this is the line. We went below it and back above it with uniform action. So since this support here, we've been anticipating that the market would bounce, and that's no surprise that we are where we are trading. I'll show you the monthly charts, why the monthly charts have been predicting a retest of all-time highs. Now that's the S&P 500 weekly. Taking a look at the daily now, this is what I was talking about that is happening on the hourly. There's this trend line here that I've been discussing with my clients. So to understand this is we broke out, which is this gap up again. And ever since, we've been using this for pullback re-entries. Pullback re-entry there. So as long as we are above that line, net, as long as we are above this line, the market is going to remain stable to bullish. And also for now, we have the daily for the S&P 500 holding above 69.1 on the daily. As long as it's above 69.1 on the daily, then definitely we have to look at this market as being favoring recording of improved all-time highs. So there's also another topside line. We need to stay above this line on the daily so that the market has a new status, breakout status, that should keep it steady to bullish even with pullbacks. So anyway, so the daily is showing that the market continues to be strong as long as that daily is above 69.1. Now, the monthly chart, S&P 500 monthly. Now you can see that if we check this prior line here, this breakout in 2023 corresponding with this price breakout of the S&P 500 monthly, once that happened, market went higher. Now notice what happened here is if you take that same line And this is what gave us confidence that after the lows here, that we were going to go back to test the highs. I've been talking about this for many weeks, that we were going to go back to test the highs, and then we'll see what happens there. So the fact that we held above RSI 50 was the key indicator that we were going to go back to new highs. Now, as we come close to the end of the month, we have to be careful here, because if the weekly breakout fails and if this rolls over here, in other words, if we end up having improvement on a monthly closing basis but with a declining RSI level, then that negative divergence could set the stage for a market that could see a strong push down, maybe even to take out the lows of early April. So in other words, if this market is to go higher, you want the RSI on the monthly to move above RSI 69.1. If the RSI can move above 69.1, then we are definitely going to be seeing higher prices. Now, keep in mind, S&P 500 is already at all-time high territory. If you take a look at the NASDAQ, it is already at all-time high territory. But now we have a lagging instrument of the major indices, which is the Dow. So the Dow might be telling us that there's a likelihood that even with pullbacks, that the Dow also has the opportunity to record fresh all-time weekly closing highs. If the S&P 500 and the NASDAQ can do it, the Dow might also have its own opportunity, which means that even with pullbacks in the other markets, ultimately there's going to be another high for the entire market landscape. So the Dow also has an opportunity of recording its own fresh highs. Now, because of the market strength and because we were anticipating the market to go back to new highs, we've been very aggressive with breakouts, and some of the breakouts have been fantastic. Let's take a look at some of the stocks that have been done. Now, the blue arrows are showing indications where I sent out the breakout alert. Here's one, PSIX, which has had a nice move. You can see the breakout level. I sent the breakout alert indicating that if it clears the prior monthly closing high at about 41, 42-ish, the stock has gone from 42, has touched the highs here of about, let's call it the high of about 70, 69-ish. So it's up more than 60% for the month. And take a look at another stock that was a recent candidate. So VRNA. Oh, by the way, I should show you the top performing stocks in the market. And these are some of the top performing stocks in the entire market, US market currently. And you can see that my clients are familiar with all of these ticker symbols. All of them. All of this. I'm not sure about this one, but here we are very familiar with all of these recent leaders, even here, Robinhood. So all of these names here are not new to us. We understand that they were going to be leaders. And so again, VRNA, this arrow show you the breakouts. This breakout here did not work out, but we didn't give up. We came back again. We had another breakout alert sent here when it was moving above the lower 30s, and then another breakout alert, couple breakout alerts here and here. So some of these stocks have been on fire, but the reason I need to stress is because we were anticipating the market to go back to new highs. So here's another recent breakout alert that was sent here, and you can see the stock has gone from 18 breakout, is now touching 36. That's a double. Let's take a look at another one here. I gave out the breakout alert to clients. This is TDUP. Gave out the breakout alert here. 2 breakout alerts. Stock has moved from under 2.5 and has touched 8.7. So very strong movers. Let's take a look here. Again, we got another stock that has exploded here. This is QBTS. I've sent a couple of breakout alerts. In fact, I sent 3 here in this time space as we were anticipating this breakout. And once the breakout took place, the stock was a buy. And we can see it's moved from about 8.5 or below. It's gone as high as 19 plus. And let's take a look at one more. This is familiar to everybody. This is PLTR. All the blue arrows show you where I sent out breakout alerts. So the breakout alerts we were anticipating was when it was forming a base here in 2024. That base was in the mid 20s. Stock has gone as high as 160 since then, or high 150s. And there was a couple breakout alerts here after this 1 month of rest. So don't miss out on future breakouts. Now, if you take a look at global markets, take a look at VT. So this is tracking global markets. Again, we had a tight base, just like US markets here, and then a breakout. Very desirable, very nice action, positive action. And we can see here again, global markets are behaving the same. We finally cleared this topside line, but understand that, as I mentioned in the S&P and the NASDAQ charts, there's a level here of the RSI that needs to continue being cleared. Otherwise, if we find resistance here, we might see this thing pull back. Now, and then again, as long as the breakout on the weekly is still holding, you can anticipate global markets to have a favorable upside movement. Now, on the monthly, you can see VT has already moved above RSI 69.1, which means that this is still a market that could see higher prices. Just like we had this period here in 2021, we stayed above 69.1, and for the entire period, we had a nice slow grinding to all-time high. So we need to stay above 69.1 if the bulls are to continue enjoying strength. Now take a look at the dollar. Now the dollar is continuing to form this, what I think, and I'm not sure, but I think this is making lower lows. But you'll notice that your RSI is barely making lower lows. So I'm anticipating that over time, this is forming negative divergence for a powerful reversal move, just like we did here. As the RSI did not go down, we created the energy for this recovery. So I would not play the dollar from a bearish perspective right now. That's just my thinking. And also notice here that we are making these lower prices, but your RSI has yet to break down. Now remember, my thinking goes to the monthly chart for the dollar. And it's not very complicated because, as I've been saying for many weeks, and remember, this is a monthly chart, so these things take time to play out. So we know that this is where we had strong movement of the dollar here. Since these lows, we had a nice move to new highs. Now we take that area of the RSI, and what I've been proposing is that if this holds on a monthly basis, in other words, if in the coming months, because it's playing out slowly, if we end up finding support here, then these are going to be important lows, and that over time, we're going to be seeing the dollar pointing higher. Which brings me to GLD. And in today's video, I'm not going to discuss GDX, and I'm not going to discuss SLV because I believe they are essentially following gold. Now, I discussed last weekend something that I thought was bearish. So last weekend, in the last weekend market analysis video, I talked about this move to new highs in gold, but take a look at where your RSI was. Your RSI barely got to 61.8, and as per my research, that tends to be one of the strongest indicators of bearish divergence. In other words, we had a price move to new highs, but your RSI did not move above 61.8. So that's the strongest negative divergence. And it also coincided with this resistance area here. Again, it's hard to see, but it coincided with this resistance area. And so I was thinking that to me was telling me that we are seeing gold showing cracks on the small time frames. And if you take a look at this support line, this RSI support line, as of right now, it looks to be broken. So for now, and okay, let's put it this way. As long as gold is below the 50-day moving average, we have to suspect lower prices. But if gold can engineer support back above the 50-day moving average, then we can allow it room for higher prices. So we can use the 50 as a generic line. Below 50 daily, the 50 moving average, we can suspect lower prices. Back above the 50-day moving average, then we can say the dollar is finding support. Now that's one way of looking at it. On the weekly, we can see that there was a breakout that was taking place. So this was we can see that prior weekly closing highs are now, let me explain this properly. I'm not explaining that very well. All right. So we have a weekly closing high there. We can use that as a breakout level. So we broke out above that level, and so let me show that. So we break out here. Essentially, we stay above that level until this week. So this week, this is now a filled weekly breakout. And I think, don't forget, I also talked about the divergence. We had a higher weekly closing high, but the RSI did not stay above 69.1. In other words, all of this to say that there are some emerging cracks as far as gold is concerned. But remember, as far as long-term picture is, as long as gold is above the 50 RSI level on the weekly, then it can have healthy pullbacks. But for now, looks like short-term gold is pointing lower. Keep in mind that the monthly is where the strength is. The monthly is still holding its RSI well above 69.1. Now, of course, I've been talking about gold being bullish since 2024 when it moved above RSI 69.1, and I've been giving you breakout alerts every time it has a rest period. And even here, this was a fresh breakout alert. Now, I need to say something here that could also be happening. Another way of looking at this is just like we had a couple rest months here, and then a fresh breakout here. We had a couple months rest here, and then a fresh breakout for gold. And of course, I gave you breakouts during all of this breakout. I sent you breakout alerts. We could also be doing the same thing here. We could be forming another base before an eventual fresh breakout. So that's also another consideration. As long as the RSI is above 69.1, we always default to a market that wants to go higher. So I think that as long as the weeklies and the dailies are not showing strength, one can stop being aggressive as far as gold and the mining stocks and the silver sector of the market is concerned. Which brings me to crude oil. And you can see crude oil had huge reversal here. 1-2 weeks to the upside. And it's lost all of those gains this week. Pretty much most of those gains this week. This is not a surprise because, as we discussed, it has come back to the top range on this 2-year weekly chart. I talked about that this is an area where it has been showing rejection. And so it's going back to its range. It's very volatile range, but you can see another rejection point here. So again, I've been saying that this is not leadership in the market, and it continues to prove that. Now, also, if you take a look at this blue line, which is around RSI 61.8, this is where we've seen that the crude oil and the energy space has been struggling. So not a huge surprise that we are going back to where we've been. Now, the daily, it's not the worst. The daily is above this top side, this line here. This line, moving above this line gave us this reaction to the upside. And just like we saw with the NASDAQ and the S&P 500 and the Dow, if it can find support in this general area, if it can stay above the red line and also above the moving averages here, if it can stay above the moving averages, then day to day for a swing trade, it might be poised to go higher. Now, I need to point out that if you take a look at the monthly chart, I might have to go back many years, but the monthly chart had given us support signals here in the last 2-3 months when it came back and found support on this line. And I've been talking about this, seems like I talk about this every week, but this is a monthly chart. This has been taking place over the last 3-4 years. This line held, and that's where we bounced off the lows. But now we have to contend with the recent topside line, this line here. As I discussed last weekend, that this line was going to be resistance. So we essentially what I'm saying is we are still stuck in this range. This is going back to about, let's call it June, July, May of 2022. And we've been in this range since then. So more than 3 years. So there's really nothing new here other than a sideways market. Now I need to point out uranium, which has had a fantastic run. And I'm going to use URA. And we can see here, this has been, I believe this is yet another positive weekly gain. This is a weekly chart. 2-year weekly. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 straight weekly closing highs. That's amazing. Now, I have been very suspicious of this area. I have to admit, you can say in a sense that I have been wrong, because ever since that breakout, we never took participation in the uranium breakout. Maybe a few stocks in that space, but generally my suspicion comes from the monthly chart, In other words, number one, we've had a very strong V-type formation. That in itself is suspicious. So I would get a little bit interested in this name if we have some rest on the weekly and then a breakout. If we can rest for 2 weeks and then break out, I'll definitely be looking at this area as being potential leadership. But one of the issues I've had with this area, with this uranium ETF, is we have this topside line on the monthly. This is the monthly. And we're in the process of clearing this line, but I also can see how this can be a trap, as in the next month, we might find ourselves back below this line to start a pullback on the monthly. That's one view. And then the other view is this backtest line here. Now you can see how we went above the red line and back below it for this reversal area. And we are now slightly above this red line, but if we end up recoiling back below it, then this is a trap. And remember, markets are very good at designing traps. So anyway, it's an area of the market that we have not participated in aggressively because of the monthly sentiment. And if I'm to summarize it again, it's a topside RSI on the monthly that gives me a little bit of a suspicion that this is not a strong area of the market. Plus, I need to point out, as of right now, it does not meet the minimum requirements for the ultimate the breakout. The MACDs, well, we can say one of the MACDs now is close to 3-year highs, but the MACDs and the RSI have not been at 3-year highs. That's why I have not been I've been thinking this area of the market is not one we should be very aggressive, and that ultimately this fails is my thinking. Unless, again, I said on the weekly, I guess on the weekly, we would need to have 2 weeks of rest, and then a future breakout would set the stage for what would be now, from a timing perspective, a better opportunity for a re-entry, and anticipate that it's going to correct some of the issues on the monthly chart. Hope all that makes sense. In other words, I just don't trust the breakout in the uranium space. Let's take a look at BTC. Now BTC, of course, is back above its weekly breakout range. So last week we closed below the breakout line, but we are back above it. So this in essence balances out. So I would say the breakout is still intact because of the immediate correction. So what needs to happen here is we need to break out above, I believe it was 109,000 on the weekly. A fresh breakout above 109 and change, 109K would be what the bulls want to see. Now, of course, we have this resistance area, and if you've been following me, we were aware that this resistance would be an issue, and which is this highs there. So if BTC is to record an amazing breakout, it needs to clear this blue line, which has been resistance, but also generally understanding that we are still within this construction of this base area. The base seems okay in my opinion. Not the worst, not the best, but it's still within that range. Now, if we let's take a look at the daily for BTC, and we can see that there's one way of looking at this. There's top side price channel there that is becoming a little bit of an issue. We would have to clear that to encourage institutions to be aggressive buyers. Now, as long as BTC is holding above that 50-day moving average, then you can allow it to be sideways as it prepares or sets the stage for a potential breakout, as long as it's above that upward sloping 50-day moving average. Now, during the recent pullbacks for BTC, if I take this line here, again, this is something I've talked about. We had this breakout. We came and used the same line. We touched it with uniform activity for the re-entry there. We touched it with uniform activity here for the recent re-entry. So the re-entries were clear to us. And also, if you take a look at this RSI level here, which corresponds with coming off the lows there, we extended this as of last week. Let me take that. So we extended that line, this area here, and it gave us good indication that this would be a potential support. We found support with uniform activity, hence we are higher. So I would say BTC is in a sideways range, and we're gonna see which way it decides to go. Let's take a look here at the 4-hourly, and I just want to discuss the fact that there's a simple line connecting recent highs. That is where BTC is struggling. So this line has been resistance. It was resistance here for this zone, and here we can see in the last couple of days we tagged that area and we are struggling. So if BTC is to go higher, it needs to clear this top side line. Otherwise, right now it is a little bit, let's say, sideways to lower as far as the 4 hourly is concerned. Now we come to the monthly chart. Now the monthly is still seeing BTC holding its RSI above 69.1. And as long as the RSI is above 69.1, you allow it room to be stable to bullish. And remember, on the long-term picture, we've been using this blue line to gauge the overall big picture sentiment. We break out above the line here. That gave us indication that the BTC was poised to go higher. We find support here for these monthly lows. We found support here in the last couple months for these lows. So as long as we are above the blue line, net, we are looking at BTC. By the way, BTC on the monthly is still breaking out. It's above the prior monthly. I think 103 was the prior monthly closing high. So this is still a breakout market. And so we can anticipate that as long as the RSI can stay above 69.1, BTC might go on to break the 200, the 300,000 price levels and above. Again, these are the closing numbers. That's it for now. I am Eric with Mother.com. I leave you as I found you, in the love and in the light of the one infinite Creator. Go forth rejoicing in the power and in the peace of the one Creator. Adonai.